Hello. Today, our group's topic is about companies' annual budget. Our group has 4 members: Huang Jiahui, Huang Zhenzhen, Wang Yu, and Yang Yunfan, which is me. There are 5 parts of our topic. Let's look at part 1, business annual plan. Business annual plan has 6 parts. The first one is about goals. Before looking forward, it is important to look back. To that end, it is a good idea to review SMART, specific, measurable, attainable, relevant, time-bound goals that can help clarify ideas, focus, and ensure resources are used in the most efficient way. The annual plan should also be closely related to companies' strategic goals. Budget. Financial factors are key to annual planning, so it's important to consider forecasts for the next 12 months. These forecasts will help plan resources, cash flow, and determine the best course of action and timing for individual projects. Expectations, responsibilities, and clear OKR objectives need to be clearly specified, indicating which teams, individuals, or departments will be responsible for carrying out the tasks. Expectations of collaborators must be very clear. Additionally, using well-defined OKR objectives and key results can help teams stay on track, as they help provide visibility into what other teams and individuals are doing. It's all about keeping employees motivated and making it clear who is responsible for what. Timeline. When measuring performance, it is important to understand how successful your company is in meeting its goals within the deadline. Break down goals into tasks and set deadlines. Temporary plans. Will craft annual plan will also take into account emergencies. It's always a good idea to think about alternatives, such as what happens if cash flow is suddenly compromised. Values and mission. It's also helpful to keep companies' ambitious future vision in mind when making annual plans. Let's look at part 2, types of budgeting. There are 6 types of budget. Let's look at the first one, master budget. A master budget is an aggregation of lower level budgets created by the different function areas in organization. It uses inputs from financial statements, the cash forecast, and the financial plan. Management teams use master budgets to plan the activities they need to achieve their business goals. In larger organization, the senior management is responsible for creating several iterations of the master budget before it is finalized. Once it has been reviewed for the final time, funds can be allocated for specific business activities. Smaller businesses often use spreadsheets to create their master budgets, but replacing the spreadsheets with efficient budgeting software typically reduces errors. The second type is operating budget. An operating budget shows a business projected revenue and the expenses associated with each for a period of time. It is similar to a profit and loss report. It includes fixed cost, variable costs, capital costs, and non-operating expenses. In most organizations, the management prepares this budget at the beginning of each year. The document is updated throughout the year, either monthly or quarterly, and can be used as a forecast for consecutive years. The third one is cash budget. A cash flow budget gives you an estimate of the money that comes in or goes out of a business for a specific period in time. Organizations create cash budgets using inferences from sales forecasts and production, and by estimating the payables and receivables. The fourth one is financial budget. Business drafts this budget to understand how much capital they will need at what times for fulfilling short-term and long-term needs. It factors in assets, liabilities, and stakeholders' equity, the important component of a balance sheet, which gave you an overall idea of your business health. The fifth one is a labor budget. For any business that is planning on hiring employees to achieve its goals, a labor budget will be important. It helps you determine the workforce you will require to achieve your goals, so you can plan the payroll for all of these employees. In addition to planning regular staffing, it also helps you allocate expenses for seasonal workers. Last one is the strategic budget. The budget is an estimate of revenue and expenses, and will remain fixed throughout the year. The nine items in the budget can be used as goals to meet regardless of any increases or decreases in sales. Strategic budgets are usually prepared by non-profits, educational institutions, or government bodies. Let's look at the third part of the presentation, components of budgeting. Estimated income. This is the money a business makes from selling goods and services. Fixed costs. Business regularly pays the same amount for a specific expense. Variable costs. The category includes the cost of goods or service that may fluctuate based on business success. One-time fee. These are one-time unexpected costs that a business may incur in any given year. Cash flow. This is the money going in and out of the business. Profit. The final budget portion is profit, which is figure derived by subtracting estimated costs from revenue. The fourth part is about planning process. The first one is to set goals. The board of directors of a company or the manager's office meeting proposes the next year's financial budget target. The second one is about prepare report. Each department proposes a detailed financial budget plan for its own department and submits it to the corporate financial management department based on its own characters and forecasted implementation conditions. The next one is review balance. The financial management department of the enterprise reviews and summarize the financial budget plans submitted by various departments and puts forward comprehensive and balanced suggestions. The fourth one is review and approve. On the basis of the reviewing and adjustment of each department, the financial management department of the enterprise prepares the financial budget plan of the enterprise and reports it to the budget management for discussion. The last one is release execution. The financial management department of the enterprise decompose the annual total budget reviewed and approved by the board of directors or the general manager's office into series of indicator systems. In the final part, we provided some samples of the budget. Of course, the data above are hypothetical. Next, let's look at the first one. Is sales budget. It has sales volume, sales unit, and sales revenue, and different kinds of products. The second one is sales income statement. It is relatively simple. It just has the time and the data. The third one is cash income statement. It has many things such as revenues from different months of the year and total cash receipts. The last one is the cash budget statement. It has time and all kinds of data and items such as beginning cash balance, cash income, operating expenses, tax expenses, interest, and so on. Thank you. That's all.